Hi team, I sincerely hope that you're having a fantastic day. Today we're gonna talk about mortgage loans catered to TaxID individuals. Yes, today is gonna be all about how to purchase a home with your TaxID. If you're a TaxID holder, please don't disqualify yourself. You could potentially buy a home using this specific loan products. Hi guys, my name is Joel Ventura and I've been in real estate for over a decade, and I've been bombarded by so many questions throughout the years as to how to purchase a home utilizing a TaxID. Now, these are my top 12 questions that I'm more than happy to share with you in this video. Without further ado, let's dig into the questions. Question number one, is this type of mortgage loan legal? Well, the short answer is yes, it is legal. In order for you to buy a home, you can either go the traditional route, which is conventional FHA, USDA, or VA loans, or the non-traditional way with exotic loans such as TaxID. The technical word is non-QM or non-qualifying mortgages. Now, this type of specific loan product that I'm talking about, it's fixed for 30 years. Because there's so many other type of non-traditional ways that you could purchase a home, but this specific loan product, it's fixed for 30 years. Question number two, what kind of interest rates are we looking at? Well, we're looking at higher interest rates than the typical conventional or FHA or VA. You still can buy a home with higher interest rate. That's the penalty that we have to pay for having a TaxID or being a TaxID holder, but you still have the opportunity to purchase a home. Question number three, several questions under this same question. There's many questions into it, but did you refinance? If so, within how many months or within how many years? And if you do, is there any type of penalty? You can refinance within 6 to 3 to even the following months. You can definitely refinance, and guess what? There's no prepaid penalty fees for it. You heard it right, no prepayment penalties. Question number four, what kind of documents we are looking to bring to the table? Well, it all depends upon your circumstances. If you're self-employed, we're gonna need either a profit and loss for the current year, bank statements for the past 12 months of your business, even taxes if need be. We are gonna need active passport. We are gonna need an active TaxID letter from the IRS, your ID for your state ID. If you don't have a state ID, the passport will do. Now, in terms of bank statements, 12 months, 2 months, or 3 months bank statements. Those are the standard documentations that we might need. Specific conditions and documents might apply for individuals with extraordinary scenarios, but those are the standard documents. Question number five, what's the ideal credit score for this particular loan products? Essentially, for this specific scenario, if you're a TaxID holder, I'll strongly suggest for you to have a higher credit score than 600. We can go all the way down to 600 and give you the mortgage loan. However, the terms and conditions are not going to be ideal for you. That's why I strongly recommend for you to have 700 plus credit score. Now, if you don't have a credit score, that leads us to question number six. If you don't have a credit score and you still buy a home and utilizing this type of loan product, yes, you can still purchase a home. Non-traditional credit threat lines will apply, such as whether you have proof that you've been renting for the past 12 months or whether you have been paying a bill on time for the past 12 months. Essentially, you can still purchase a home even if you don't have a credit score. Question number seven, how long do you have to prove that you're being employed? This question, it's a little bit tricky because depending on your scenario or your employment history, the lender could accommodate, meaning you can be as employed as little as 3 months, provide strong deposits, and then you can purchase a home. Or you can provide 12-month history of employment and off you go. The more time you show as employment history goes, the better terms and conditions for you. Question number 8. If you earn cash, let's say you work in an industry that you earn cash only and you don't receive a pay stub. Let's take, for example, if you work in the industry that you receive tips, you can still buy a home. However, you would need to show your deposits, your cash deposits for the past past 12 months, ideally. You can definitely purchase a home with earning only cash. Question number 9. In terms of savings, how much do you have to put down? Well, in terms of how much you have to put down, you will come down to your credit history as well as your earning potential. Well, typically these loan products, you have to put down at least 10, 15, 20, or 25%, depending upon your scenario. But it could go as little as 10%, and we will have to verify full docs. We have to verify your rental history. We have to verify full credit score, full employment for the past 24 months. So essentially, you can go as little as 10%, or the higher you put money down, the higher the down payment, the less questions the lender asks. Question number 10. What if you have a relative that is willing to provide you with a down payment as a gift? Is this allowable? It is allowable. Question number 11. What type of properties are you allowed to purchase? Well, the type of properties that you're allowed to purchase, it's essentially any type of property with land, you are okay. Townhomes, single family homes, if you have a property that it's essentially multifamily, you're perfectly fine. Essentially, you can definitely purchase any type of dwelling as long as there is a land included in the dwelling. Question number 12. Can you buy different type of properties at the same time? Short answer, it's yes, as long as it's explainable. Allow me to explain. Let's say you buy a condominium. Now you want to buy a townhome. You can definitely purchase a bigger and better property with a tax ID, keep the old property rented, and live in the most current one, which is going to be the townhome. Or you can buy a townhome and then buy a single family home, and if you want to keep the townhome, you do the same thing. Rinse and repeat, and that's how you get multiple properties with tax ID. Thank you for sticking around with me in this video. We're gonna talk about now the bonus questions. Bonus question number 1. I reside, I live outside the United States, I work, and I have bank accounts outside the US. But I want to buy a property, let's say in Virginia or Maryland or New York, as if I were to be inside the United States. Can I still do that? Yes, you may, as long as you put down 30 to 35%. You may utilize a mortgage loan as long as you put down 30 to 35%. Example, if the property costs $100,000, and to be quite honest, I don't know where we can find $100,000 property nowadays, but if you were to find one, you put down $30,000 to $35,000. Question number 2. I have a relative who has a social and I have a tax ID. We both want to combine forces and we buy a home using a mortgage loan, let's say a conventional mortgage loan, a regular conventional. No, what the bank is going to do, it's going to analyze the merit of the application, and the terms and conditions are going to be applicable. It's going to be the ones with the higher risk. In this case, it will be you with a tax ID. The bank is going to see that your relative has a social, but because of you, the terms and conditions that are going to apply are going to be the ones with the tax ID because you are a higher risk factor. Question number 3. And I put down as little as 3 to 5% even though I have tax ID. What you're talking about now, it's a loan product better known as Trio. You may buy a home, but we put in down as little as 3 to 5%, but you're not buying a home. What you're gonna do, it's this loan product that it's pretty much rent to own a home for 40 years. And guess what? The terms and conditions are not going to be in your favor. I strongly suggest for you not to pick these loan products because they're not meant to protect you. You're not going to have the property under your name. It's going to be under the name of the bank institution. The title is not going to be under your name. It's going to be for 40 years and you're going to have prepayment penalties. So stay away from that kind of products. Those are the bonus questions. This is for tax ID loans. If you have any further questions, please don't hesitate. Comment down below. It's been a pleasure. My name is Joel Ventura and I'll see you until the next video.